Hello, welcome to the weekly technical analysis review for Wednesday, October 30th. I'm Rafi Barajan at XM.com, and for this week we're going to be looking at the Euro USD, Pound Yen, and gold in the weekly chart. So let's start first with the Euro USD in the daily chart. Looking at momentum indicators, we've got a mixed outlook there. The stochastics are pointing upwards. The RSI is tilting slightly down. Overall, it's a neutral picture in the short term, and we can see that prices have met resistance at the Tenkan Sen line of the Ichimoku cloud, so that's around 1.1125. So as long as that resistance holds, there's a risk that prices could slip back inside the Ichimoku cloud, shifting the short-term bias back to a bearish one, though we're likely to see support coming from the 38.2% Fibonacci retracement of the downline from 1.1411 to 1.0878, so that's at 1.1082. Below that, the next key support lies around 1.1030, so that's the bottom of the Ichimoku cloud, and also we've got the 50-day moving average as well as the Kijun Sen line there as well. So if that's support, if that important support region fails, we're likely to see prices testing the 1.10 level before heading back towards that 2.5-year low of 1.0878, and that would also shift the medium-term picture back to a bearish one as well. At the moment, the medium-term picture has improved to a neutral one in recent weeks. On the upside, if we do see a break above the Tenkan Sen line, we're likely to see resistance at the 50% Fibonacci at 1.1145 before prices head towards the 1.12 level. That's the 61.8% Fibonacci retracement. So we do need to see prices climbing above the 61.8% Fibonacci if we are to get a shift to a bullish picture in the medium term. Without that, the outlook will remain neutral. Let's now turn to Pound Yen, which again we are seeing some changes there in the medium term picture. It's actually on the verge of turning bullish. We would need to see prices breaking convincingly above the 61.8% Fibonacci of the down leg from 148.86 to 126.53. At the moment, the 61.8% Fibonacci is proving to be a pretty sticky resistance level around 140.33, so if that resistance holds, prices could slip back towards the 200-day moving average at 138.67 before heading towards the 50% Fibonacci at 137.70. Slipping below the 50% Fibonacci would shift the focus back to the downside, and we could see the 135 level coming back into play. However, if we were to get a clear break above 140.33, which is possible given that we've got the stochastics pointing outwards, RSI is comfortably in positive territory, we could see prices head for the 144 level, that's the 78.6% Fibonacci, before aiming for the 147 level. That's been an important resistance level in the past. And finally, for today, let's take a look at gold in the daily chart. In fact, I did wrongly say weekly at the intro. So gold in the daily chart, we can see it's again, we've got a neutral picture here. Stochastics, although they are pointing downwards, the MACD is in fact pretty flat at the moment. The downwards trending stochastics do suggest there's still some downside risks, and the reason for that is because prices are being capped below that short-term descending trend line. We did see a spike above that trend line a few days ago, but then prices slipped back below it, and now they're standing both below the 50 and 20-day moving averages. So if gold is unable to break above that resistance zone, we're likely to see prices drifting towards the 1,475 level, and then below that we've got the bottom of the recent range around 1,455. If that support level fails as well, we could see gold starting to switch from the current neutral picture in the medium term to a more bearish one, and then lower down we've got 1,435 and 1,400 levels being the key areas to watch out for. On the upside, if we do see a break above that trend line, that we're likely to get some resistance around 1,512 before heading towards 1,540. But the main target on the upside is, of course, that 6-year high 1,557 from back in August. So that's the main target, because without a break above that level, then gold price will probably continue to consolidate both in the short and medium term. So that's it from me. Thank you very much for watching, and have a great day.